All right. Good afternoon, everybody live. Let me know how the volume is. Once I get a few people to join, I want to get some feedback on the volume. Different background, as you can see. I'm live from my casa. It's Memorial Day. Thanks to everyone who served. Today's a day to celebrate, just being able to celebrate, I think. So it's a holiday, but I'm trying to do as many Mondays in a row as possible. I told myself I'm going to give this live thing a go for 12 or 15 weeks, see how it goes. The feedback's been amazing. So I'll probably continue it for at least a year, and we'll go from there. That'll be my promise. Alexander, what's up? Good to have you. I didn't know today, being a holiday, whether it's going to be highly attended, not attended at all, but whoever's here joining, I appreciate you. Throw any number of questions you have off me. I've had messages from real estate agents, from clients. People are out looking at houses today, so it may be a holiday, but real estate never takes a day off, right? Especially for those who are looking in today's market. I'm sure that they're trying to find any advantage they can. And maybe if there's less people out there shopping on Memorial Day, then they'll have an advantage. So cool to see that we've already got 10 people on, and hopefully that continues. Each week we've been getting up to like 40 or 50 people on here, throwing questions out, have an open dialogue about the real estate market, mortgage, how to get your offers accepted, what people are seeing in different markets across the nation. So for you guys that are on right now, how's the volume? I'm working with this little tiny mic instead of the big Yeti mic I have in my office, right? But I think this thing will do. I know I've recorded some videos for clients on this thing, and it's been working out. Man, I got a lot of sun today. It's hot. In Sacramento, it's like 105 or so today. So I was out there baking in the sun, hanging out with family. Sounds good? All right, cool. All right. Good evening, Kevin. Thanks for joining. Appreciate you. Kevin, you know what? You're the guy out in Florida who helps with the buses. I appreciate you joining me, man. I checked out some of those videos that you sent me over. Forgive me if my memory isn't exactly correct, but I think you are a volunteer somewhere in Florida helping riders who take public transportation, a bus system, with their routes, what buses they need to take, and all that stuff. Really appreciated those personal messages, Kevin. Just want you to know you're doing a great job, man. Your service is appreciated. I already know from watching those videos by everyone in Florida who takes public transport. So keep up the good work, brother. And I appreciate you joining and being part of my lives. Appreciate the support. All right. Good. People are saying that the volume is good. Well, that's good to hear. How many home loans are allowed without having to use hard money? It's a good question, Caesar. And this is one I'm sure you're asking as an investor. And everybody's heard that Fannie and Freddie, the conventional conforming type loans, plain vanilla type loans, right? They get you the best interest rate. You're going to be limited to 10 of those per individual. Cool things I see are couples that put 10 homes in the name of the husband and 10 homes in the name of the wife, or wife, husband, whatever you want to, however your family structure is, right? But it's cool because that way you kind of get double, right? The only caveat is that you have to be able to qualify, and qualifying even for 10 is difficult because you've got to have enough on the income side to support 10 mortgage payments plus all your other debt and whatnot. And of course, you can add some of the income you get from the rentals to the income side to help the income side rise up. But to get that debt to income ratio to work, you got to be doing well as it is. And so 10 is the answer, Caesar. Or maybe you just don't qualify for any more than 1, 2, or 3. And so you want to do hard money for that reason. What I would tell you to look into is in between the conventional loans and hard money loans, you'll find non-QM loans. I made a video on that at the request of somebody who follows. And you can use bank statements to show that you've got income. You can do it based on the debt service coverage ratio. I try not to use too many acronyms, right? Basically, if the rents are more than the payment, you can get financing that way. Sure, you have to have decent credit. Sure, you have to put 20% down, but it's a way to qualify without the standard. Here's my income. Here's what I file on my taxes. Here's what a W-2 says. You can find those loans, and they're more prevalent than they've ever been. And there's more, different types of them there's ever been. So look into that if you're either at your 10 loan limit or you don't qualify past whatever conventional loans you have. All right. Thanks for joining us. Arnold, is there an N missing or is it just Arnold? Might just be Arnold. Boston, Massachusetts. Quick side note. I got a buddy from Boston who was in a networking group I'm in and used to call me Maddie Mortgage with that Boston accent. I loved it. I almost considered going from Math and Mortgage guy to Maddie Mortgage just because my buddy Kevin said it with such a cool accent. Monthly income of $8,000, monthly recurring debt of $800. My FICO is 745. What is the max loan I can get pre-approved for? This is the wrong question. That's not the question you should be asking, is what's the max I can get approved for? Depending on what you're trying to do. Are you trying to buy an investment property? Are you trying to buy a primary residence? If you're trying to buy a primary residence, sure, you can reach out to somebody and you can, with an application and a credit pull and all that other stuff, have them give you what you qualify for. But it might be more important to say, hey, in my area, homes at about 600,000 are what would work for me and my situation, me and my family, whatever the case may be. And then work back into what you're trying to buy versus what your max is. And I don't want to dance around the question all night. I'll do some math for you to give you a rough idea, but I just want to tell you, I wouldn't be asking that question. I would just say, I like the stuff at 600,000. I have 10% to put down at 600,000. Would I qualify for that? And what I would tell people once I know what they're looking for, hey, I'm looking for 550 to 600, 10% down. Hey, listen, you qualify up into the 700 range, probably. I know you don't want to buy that high, but you do. Here's what it looks like at 550, 575, 600. Here's 625 if you go a little bit higher. But I would encourage you to have that be the conversation just versus how much do I qualify for. But let's do some quick math. Let's 8,000 on the monthly income side, 800 in recurring debt. We'll use a conservative 45% of that 8,000. Some programs you can go to 50%. Some programs are going to say 45%. So 32, 36 total mortgage payment plus that $800 in debt can exceed 3,600, which is 45% of 8,000. So you can qualify for a mortgage up to $2,800. Now here's where I would need more information to figure out the max loan amount, because I'm telling you your max mortgage payment is $2,800. The things I don't know is how much money are you putting down? What are the property taxes in Boston, Massachusetts? I'm California, and I know California is about 1.25. I couldn't tell you what Texas or Alabama or Illinois or Florida or Massachusetts are. I'm all in, driving 100 miles an hour in my California lane, doing a lot of loans in California, doing zero in Massachusetts. So if you did some calculations and said, hey, if I got a 3% rate and I borrowed $540,000, I did $600,000 purchase with 10% down, you could figure out what that principal and interest is. If that's $2,000 and you know that on a $600,000 house, the taxes are about $500 a month, and you know that the homeowner's insurance is about $100 a month, and you know that the mortgage insurance, if you put less than 20% down, you factor that in, that's going to be about $125 a month. Then you can look at, okay, that's $2,725. Under the $2,800, I probably qualify. And so with those two things, I could give you a number, but it's going to be different if you're putting 5% down versus putting 25% down, right? But I would guess, my guesstimate is the max loan is going to be somewhere in the $500,000 to $600,000 range, depending on the tax rate out there, depending on your down payment, whether or not there's going to be mortgage insurance on a loan. But yeah, that's that. Hello. Thanks for joining from Central Florida. It's 9 p.m. out there. I appreciate you joining the live. I appreciate everybody who finds some time on Mondays to join here, ask good questions, get us chatting about real estate. I enjoy it, so I could do it for hours and hours every single Monday, and I'll continue to do it. In contract, and sellers are building new home in Florida, so we're not closing until December. How long before closing can I lock a rate? Would you be nervous about this timeline for interest rate? Yeah, I mean, probably, just because you don't know, and uncertainty is scary. I would, the thing that scares me more though, honestly, reading that and trying to put myself in your shoes, if this was me, I'd be scared about something going on with the people you're buying from. We all know how much building has slowed. It's been hard getting supplies. Lumber costs are up. Builders are purposely slowing down. That's my personal opinion, because they're incentivized to. As they slow down and demand is as high as it is, they get to ask more for the stuff that they do have in stock. And so I feel like they're picking up lots, but not building. They might be waiting for lumber to come back down in price, but I've just heard a lot of that lately, that builders are slowing down the speed in which they're building. And so I'd be afraid, if I was in your shoes. Let's say that you say, I don't want to gamble and I'm going to do a 180-day lock, and you lock in July for 180 days, and these people's new bill gets pushed out into March of 2022. That's where, you've paid for this lock. You've, taken a higher rate that you can get if you locked for 30 or 60 days. That's the stuff I'd be nervous about, is that, which, I mean, maybe they would just have to close on your deal and go rent while they're waiting for their home to be built, or cover the cost of your rate lock. But yeah, that's a ways away. So I guess my honest answer is, yeah, I'd be concerned. I'd be concerned about something happening with their timeline and them trying to push it out even further than December. Because for every time I've heard this thing is supposed to close in December, timelines get missed all the time. So there's that. But look at whoever you're working with, what their 180-day lock is. Those locks can be expensive. And if the current rate is 3% and they want to lock you into 3.5, I don't know if I'd be super excited to jump on that. But if it's maybe 3.25, I might take it for some certainty. So that's my best advice. Hey, what's up, Eddie? Thanks for joining. A little refinance question. How are you? I have $240 that I owe. The house is appraised at $320. What's the max I can get for a cash out refi? Most. Even FHA moved. Whoa, mercy. Almost dropped a light. Look at this. Boom. This is a setup I'm not used to, because I'm at the casa. I'm at the house. I like to write notes as I talk. Helps me think clear. So 320. This is a common question. This is a good question. Like I was starting to say, FHA capped at 80% loan to value. Conventional cash out is your primary home, I'm assuming, maxed at 80% loan to value. Sure, there's some wacky products out there you could probably find that might go higher, but for all intents and purposes, 99% of loans are going to be capped at 80% loan to value. And for everybody listening, because this is a really common question. I'm glad you asked it. You take 80% of that 320. So 320 times 80%, 256. Somebody check my math. I just did it in my head. 256 is your max loan amount, because that's 80% of 320. Where people get confused is they say, hey, listen, I've got 80,000 in equity. I owe 240 and it's worth 320. So of that 80,000 in equity, I can take 80% of that. That's not how it works. You can't take 64 of that out and then, owe 304. No. 320 is the value. You multiply that by 80%. Your max loan amount in this case, Eddie, is 256. And here's the not so good news about a cash out refi. You're going to take a higher rate for doing a cash out refi. And let's say there's a lender fee of $1,000. There's an appraisal. There's $1,300 in title fees. You're prepaying your taxes and insurance. There might be $5 or $6K baked into fees and prepaids. And so, truth be told, you could really only pull about $10,000 in cash out. More than likely, what I would advise to you in this scenario is if you can refinance and pull no cash out and lower your rate to where it makes sense, and you can recoup the cost of the refinance within 2 years, $3,000 in loan costs versus $200 a month in savings would be a 15-month break even. If you could do that, do a rate and term. Very unlikely I'm going to tell you to take a higher rate and do a cash out when you can only really access about $10,000 in cash out because you're maxed to that 256 loan amount. And there's going to be a few thousand in costs baked in there. So great question. Hopefully I answered it for you and other people got some benefit from that as well. Great question. Thanks, brother. Mona, thanks for joining. I appreciate you. Glad we referred you to somebody great. For us first-time home buyers, do we or does the bank select the real estate attorney, title company, and escrow company? I'll tell you how it works in California. In California, 9 times out of 10, when you get into contract, the listing agent on the sell side picks the title company. And truth be told, most title companies all have similar fees. They all are competent and get a loan from in contract to close. And so it's not going to really matter. If you're in another state that uses real estate attorneys, we don't use them in California. We just use a title company. Down in Southern California, they've got escrow and title kind of separate. And so they, use both. But in neither case do we use a real estate attorney. So my guess is that that's the list side. Somebody chime in and let me know. I'm going to talk to my buddy Kyle Seagraves out in Ohio because I'm fairly certain they're a state, and he works in states that use real estate attorneys to figure out if that's chosen by the sell side, which would be my guess. If I put 20% down and want to save on escrow costs in closing, would I get any resistance from lender if I waive escrow? It was discouraged when I discussed initially. They shouldn't. And as a broker who deals with 50 plus lenders, I can't think of any of them that really care. I remember 4 or 5 years ago, lenders would disincentivize you by you'd have an 8 higher in rate if you waived escrows. But now, mostly any lender I work with, nothing's going to change. If you waive escrows, all good. And yeah, I guess it's just your personal preference. I personally don't see why anybody would want to pay all that stuff separate. Have another bill to remember to pay. Like once a year, you pay the homeowner's insurance. Once a year, or twice a year, actually, you pay the county your tax bill. But to each his own, I guess. You're right in that when you close, you're not going to have to pay in advance and put down reserves into an escrow account like you do when the mortgage company holds those funds and does the escrow for you. So yeah, you shouldn't get pushback is the answer. What's up, Linda? You're in South Florida too? Good vibes. I appreciate you and your support. All my videos. One of these days you got to tell me I didn't like that video that much, Matt, because so far every video I put out, you've told me how awesome it is. So find something that you don't like and put in the comments. I like most of your videos, but this one sucks. Just kidding. You don't have to do that. All right. Cash out refi on a $130K loan. BOJIM. Forgot to say hello. Hello to you. Good to see you back. 6 years remaining. All right, you know me, man. I'll price this baby up right now. Cash out. Here's what you have going for you in your scenario. Your 130 plus 100, you're still going to be well under 60% loan to value. And so the rates are going to be great because the lender is feeling really good about loaning 230 on a $600,000 home. They pull your credit and they see that you got an 800. They feel even better. Refinance, cash out. And granted, this varies by zip code. I learned that the hard way. I'll put this stuff in my pricing engine, and I will get one price in one zip code and different price in zip. Is that weird? Is that kind of crazy? But that's how it works. Like it or love it, that sometimes there's small pricing adjustments for different zip codes. And, wherever the heck you are, your state might get different pricing. You might work with a lender that's set up different pricing structure. So this is just rough figures for you. Cash out refi, owner occupied, 230 grand, $600,000 value. You're about 2,375 without paying any points. If you wanted to pay points, you certainly could. Point gets you down to like a 2.1. Couple points gets you down to a 1,875. And, really a couple points on 230 isn't a ton of money, $4,600, but it's also paying $4,600 on a fairly small loan amount. So up to you. The principal and interest on 230 is about $1,520 a month on a 15-year. So yeah, that's that. 2.3 no points, 2.1 a point, 1,875 a couple points. You can do the math. I mean, if we're paying a point and we're saving $27 a month, 8-year break even, I don't know. I think probably makes more sense to take the 2.375 if you want to jam extra payments at it. Do that, but don't pay points to buy it down. Thank you, Eddie. Glad I could help. North Carolina, Mona. Yeah, ask about real estate attorneys and who chooses those. Somebody in this live, in these comments, is probably going to have an answer for us on how it works in an attorney state. Who picks that? All right. Aline, thanks for joining. Do you need 15% down for a multifamily if you already have an FHA, or can you do 5% if you're house hacking? If you already have FHA, you can't get another FHA. So that's number one. Number two, well, here multifamily. There was products that literally went away like within the last 30 to 60 days that were a smaller down payment on multifamily if you're owner occ, right? And you're house hacking. You're probably going to have to put 20% down. Let's see if I can find. I don't think if you're occupying it on like a duplex, you can put 15% down. I'm going to price it. And see if we get something. I've had a lot of sun today, and I've been wrong before. Primary, 2 to 4, 2 unit. Sound like somebody who's got a 748 credit score. Good credit. All right, let's see. Let's see if I don't think we're no dice. Oh, I lie. Duplex, 15% down. Yep. And the mortgage insurance isn't that bad. Cheap. All right. Primary, 2-unit, 15%. That's why I go live every week. I can run scenarios, get questions I haven't seen in a little bit, and do that. So yeah, if you already have an FHA, you're moving out of that, moving to a new place, and you got to go conventional, 15% on a duplex. You know what? Let's do this. Let's try a triplex, because I think a triplex, you're no dice. I think a 3-4, you got to put 20% down. That's might have been where my brain was like, no, you got to do 20. Yeah, unless you qualify for Home Possible, which not a lot of people do in California. So, all right, what's up, Michael Ocean? How big is my team? We've got full-time processor, 4 full-time support staff. I got a new guy starting tomorrow. He's going to be junior loan officer. But I guess we're 6 or 7, depending on how you want to count it. And we're closing purchases anywhere from 17 to 30 days. The ones that are taking 30 days are a little more rural, and the appraisals take longer, or there's a hiccup with the seller owning solar, getting docs from the title company or from the agents that are necessary for closing, or the buyer takes 4.5 days to get a bank statement, or the buyer has something that's really hard to get from like the court system. It's super slow right now, but plain vanilla deal where there's no third party stuff that's holding us up, we'll get you the finish line in 12 business days, which is 15, 17 calendar days, depending on how it falls. And so, that's the fastest. 30 is probably the slowest. And, there's all kinds of outside stuff outside of our control, but if it's a fairly vanilla deal and we've got a super responsive agent, super responsive buyer, everyone's getting us what we need, my team is on it, bro. I can guarantee you that. It's never sitting in our lap for more than 19 minutes. It's getting pushed to processing, getting pushed to underwriting, back to the borrower. Hey, we need X, Y, and Z. Get it back to us as soon as possible. So we push it back into underwriting, and we're off and running. Most agents I work with are writing 24, 25-day contracts because we don't want to overpromise. And in most cases, we're meeting that. We're not perfect, and stuff comes up outside of our control, but I admit it like a big boy. Hey, we're not going to meet that closing date. We're going to be a couple days behind. Here's why. File's in great shape. We're still getting the loan closed. And usually you communicate to all sides and everybody's all good. Miss Taylor, how you doing? This is Kavita Kombucha Pineapple Peach. That's what I got in the cup, in case you were wondering what I'm sipping on. Special Memorial Day drink. Now, I'm a big kombucha fan. I think the probiotics or something in it are good for you. Have you been seeing an increase in inventory? Pre-COVID, do more people list during the summer when school's out? Usually the spring is the busiest. And so I think a stat I saw for Sacramento and surrounding where I'm at was 1,200 as of a few months ago, homes listed, and now 1,600. So that's a 33% increase. So I'm seeing more inventory. I'm feeling it. I'm feeling more inventory. And I feel like more people are getting into contract. Spring is usually when a lot more people list. And so we're a little bit behind that, to be honest, Linda. And summer, it's, more action is happening spring and summer for sure. And that's when the, seasonality of real estate is really is really moving along. It'll be interesting to see, Linda. I really think June and July are going to be important, and I'm excited to see more inventory. So let's see. Tomorrow's June. Let's see what comes of it. Zeta, you and Linda think alike. Great minds think alike. Spring, summer inventory. It's up. It's just not up enough. It's not up enough to move the needle, but I think it's up a little bit to where more people are getting their offers accepted. So that's a good thing. Are people's offers accepted with 3% down? This is a great question, John. And I made this. What was the video I made? The ugly truth about the market this year is it's not fair. And so all other things being equal, John, your 3% versus somebody else's 20%, you guys are both offering 400,000. You guys are both splitting the fees the same with the seller. Everything else is the same. The answer is no. But here's what happens. You're putting 3% down. You offer 405. The seller's got another offer that's 402. And everything else is equal, except for that they printed out their pre-approval online. And that's the 402, 20% down. And you're working with a local mortgage broker. And I tell my agent that I'm working with on this specific deal, CC me on the offer. Let me follow up with the listing agent. I call the listing agent and we're in at 405. You're putting 3% down. I call them. Hey, I'm calling on offer that was just put in on 123 Main Street. Susie Jones submitted the offer for John Jones. No relation, both Jones. Super well-qualified buyer. He's got plenty of money in the bank, choosing to put 3% down, going to save those reserves. They really want to do some things in this house to really make it home for their family. But I just want to let you know, great borrowers, great income. I've verified everything. I've got a full file. I'm ready to get going on this thing and close it in 22 days. If you or your seller have any questions for me about this, please let me know. Now, when they talk to their seller, they should have more confidence in you. The offers are close. And at the end of the day, that $3,000 is essentially the same. But this 402 offer with 20% down, just printed off a pre-approval. Their agent tells the seller, I never talked to any lender. I don't know. I mean, they're working with a big, company that does Super Bowl ads, but I also know they can print out stuff without even talking to somebody, with just filling out something online. And so their agent tells the seller, we don't know if that person can really close with 20% down. You're going to get accepted over that offer. If they've also got a great real estate agent and a great lender who calls and sells it and does all that other stuff, then, it's probably case by case on who gets accepted. But the moral of the story is 3%. I literally just got something 3% accepted on Friday. It's not impossible. So don't give up. Just make sure that you've got a really great team, and that's realtor and lender, and put your best foot forward, put your best offer forward on the first time around, because it might be your only time. There's not a lot of counters I'm seeing in my market where it's like, oh, let's counter 2 or 3 people. Nope. People are just putting in their highest and best off the bat and either getting accepted or not. So best of luck to you. You are right. Eddie, kombucha is a great alternative to beer. I gave up on drinking years and years ago. Hi from Chicago. My wife was born in Chicago. I like Chicago. I think we're going to go back sometime this year, see Wrigley Field. We were there when they won the series, but didn't want to pay $2,000 for standing room only tickets. So still have not been in Wrigley. Have been to Chicago, never been to Wrigley Field. 360-day lock. It's not too good to be true, but here's the question. Is like, I would please, Aru, follow up with me on this and tell me, just because I come across new stuff all the time and I'd love to see what they're offering. Lenders will offer something like this, and it's not too good to be true, but here's the thing. Your current scenario, if you were buying a resale home and you got into contract and I ran your numbers, I told you, a 30-day lock was 2.8 9.2, these guys might be like, listen, we can get you a 30-day lock. It's a 3.875. If it's a full percentage point higher, the good news is it protects you. And if rates go to 4.5, you're fine. They're probably not going to go to 4.5, but that's what you got to find out is the lock could be a 900-year lock. That's not the important part. The important part is what's the rate and what's the cost for that rate? Because maybe they charge you 2 points to lock in a 3.5. So the rate's high and the points are high. I'm interested though. Please follow up. Anthony Taylor, how many times do you pull credit and do underwriting while getting pre-approval to closing? Here's how most lenders do it. Thanks for the question. Thanks for joining. Great question. We're going to pull your credit. We're going to pre-approve you. We're going to submit your loan. And we've got your credit that we pulled on May 6th, right? Lender underwrites the file. Everything's fine and dandy. We get to the finish line and it's June 17th. Before some lenders draw docs, and it's different for all lenders, they're just going to do a soft pull. And they're going to look at the old credit report, and you've got 2 car payments, a student loan, and a credit card. If the new soft pull also has, a credit pull from a boat place, they're going to see if you bought a boat. They're basically checking for new debts, if anything in your credit profile changed. So, moral of the story, do not go take on a bunch of new debt while you're in process, because yes, lenders will pull it, albeit a soft pull. They're pulling and they're looking for new credit trade lines before you close your loan. I don't have anybody in the comments as the like police, but do me a favor, hit the like button for the YouTube algorithm. Let me see what we got so far. See, we only got 10. We got 32 people watching. We got 10 likes. I'm batting about 330. Only a 30 of you guys are liking what I'm putting down. If we can get that to maybe 16, I can bat 500. We'll be in business. Keep the questions coming. I really enjoy all of them. I had a couple things written down, questions I got today, conversations I had today, people hunting in today's market. And I thought, you know what? If there's any lull where I don't have questions coming in, I'm going to touch on these. So while I'm waiting for more awesome questions from all you guys, I'm just going to go ahead and share this, which is, do gift funds need to be seasoned? I had somebody call me today and say, hey, I'm getting gift funds from my parents. They're going to help me with $30,000. This buyer is buying something in the $500,000 range and was probably going to do 5% down. With the gift from mom and dad, they can now do 10% down, get a better looking loan. And they were not sure what they were going to have to provide from their parents. Do the parents send me the money and it goes in my bank account? Then you need 2 months of that. Do I need to provide a couple months of their bank statements? And then they're going to ask questions on that. Does it have, what do we need to do sourcing the funds from my parents' account? So here's what I'll tell you. For this scenario and for any conventional scenario, by far, the best way to structure it is Bill and Bobby Sue gifting, and this is a gift letter template. It's already written out, so you don't have to write it yourself. Gifting this number of dollars for the purchase of this house at this address, and it's coming from, and then it's Chase account 456789. Sign it. This is gift funds. It's not a loan of any type. I don't even know what the other verbiage is, but we give you that gift letter template, so you don't have to worry about the verbiage. And we know it's a template that the lenders will accept. They wire the funds directly from their account to the title company. And a week before closing, 3 days before closing, whenever we've got all the numbers ironed out and docs drawn, we'll tell you, okay, $54,256 is the total number you got to wire to title. So you've got 24 and some change coming from you. You got 30,000 coming from mom and dad. You wired a title, mom and dad wired a title. That's it. The name The bank account number, everything from your gift letter matches the incoming wire. Title's cool. Lender's cool. We don't want anything else. It matches. It's a gift. Done deal. There's tons of other ways to do it that require more paperwork, that require a bunch more stuff. I don't want you to do more work. I want it to be easy. So the gift letter, wire directly to title. Bam, done. Piece of cake. All right. This is a good question, Michael. And I appreciate you asking it. Searching for a house fully underwritten by a local credit union, which I'll answer this question first. Fully underwritten. Finding a nice way to say it. Doesn't mean much, right? You come to me and my team and we pre-approve you. Not a stretch to say that my support staff, operations manager, fully licensed loan officers that understand loans at a high level, my processor understands loans at a high level, are going to be more knowledgeable about guidelines and what approves and what doesn't, more so than an underwriter. So it's like, oh, this has been through underwriting. It sounds so good, right? If we tell you and get a loan done for you, I promise you, we can get a loan done. And the only issues I have with underwriting are underwriters not understanding the guidelines and us having to explain it to them. Hey, Mr. and Mrs. Underwriter, my processor all day, every day. Here's what the guideline says. Here's what we provided. Clear the condition. And it's us teaching them, right? So that's my way of saying that the whole fully underwritten thing is just a marketing thing. If there's super complex income or literally like a 1 in 100 files where we don't know what the underwriter's specific company is going to do with an income or with something, we'll send it in to get pre-underwritten. But if it's like 99% of the loans we're doing, we pre-approve it and you're good to go. And honestly, as a broker, I'm sending stuff and getting approval within 4 hours or a day at the longest. So that fully underwritten doesn't save anybody any time. Once I submit, I'm going to get an approval in a day max. So the fully underwritten thing, it's been used as marketing to say, oh yeah, we're going to save all this time. We'll fully underwrite you. And then once we get in contract, it's off and running. We got you closed real quick. I don't know. Credit unions are at least better than banks, but I don't think they're closing really fast. Rant over on the first part. Now let's go to the second part. Should you shop around for mortgages or wait until you make an offer? I highly encourage you to not wait until you make an offer. I highly encourage you to talk to a local mortgage broker, then weigh side by side. You can talk to your credit union, talk to the broker on the same day. Get 2 quotes from June 1st, 2021. That day's pricing and decide, who do I like more? Who do I trust more? And who's getting me the best deal? Sometimes like and trust and can close quick and all that stuff might even outweigh it if it's 2.94 versus 2.99 or 3.06 versus 3.125. You might just say, I'm willing to pay a smidgen more for somebody who's more knowledgeable, can help me get the offer accepted, can walk me through this, can answer calls at 7:30 at night, those things, right? But do all that legwork first so that when you get your offer accepted, you're not scrambling to figure out who you're using. All you're doing is saying, Matt and team, I got an offer accepted. Here it is. Let's go. Because then you can even have the conversation of, what do I do once my offer's accepted to close in the 24 days that my realtor promised we can close in to get the offer accepted? Well, if we know that we've got you as a client and we've got everything in and we're ready to roll, it's, here's the members of my team that I want you to get the fully executed contract to. Not only do we need the contract, we need the escrow contact information. We're going to order fees. We're going to get those back. We're going to disclose. We're going to order appraisal. We're going to get rolling as soon as you get into contract. Those are the things that when I see people who are shopping, even if it's calling me, right? Where it's like, oh, that should be a good thing, right? You're calling me. They're already pre-approved at the bank. They got their offer accepted. It's not the time to be shopping around and stuff. Like, get that done first, then be set with, this is who I'm going to use. Because if you compare apples to apples on June 1st, come June 17th, nothing's different. It's not like on this day the credit union was better and 14 days later the broker's better. Whoever's better on that day is going to be better on day 15. And what you're going to find if you wait until you're in contract, then you're just calling, hey, I'm calling, I'm in contract, you're going to get some not so great characters that realize like, this guy's in contract. This is a deal. This is something that isn't just a pre-approval. It's a deal. I want to win this thing. If I have to lie, cheat, steal, tell them something that's not true, and then 2 or 3 weeks down the road, that person who promised you the world says, oh yeah, dude, well, I thought you were a 721 credit score. We had to re-pull it, and now it's a 717. So the mortgage insurance is a little bit more expensive than I initially told you, and this is more expensive, but sorry, man. And you've already paid for the appraisal. You're in so deep you can't go back, right? Establish all that stuff up front to avoid that, because I see it, and not the way I would go about it. So hopefully that rant was helpful. All right, Sarah, I'm guessing you do something with soccer. My business income is in my personal savings account. I am a sole prop. I would like to use down payment from that account. Totally fine. Totally fine. The only thing you're going to want to figure out is self-employed borrowers are being underwritten more strict than they ever have before. And so if you've got 20 taxes filed, then they're looking at 19 taxes, 20 taxes year to date in 2021. And year to date is going to include not just the P&L, but also 3 months of bank statements probably. So if it's personal savings account and business stuff is coming in and out of it, and personal stuff's coming in and out of it, you might have some splaining to do. But the down payment coming from there is fine. And I know in the past they've been like, well, you got to prove that it's not going to affect the business. I haven't had any pushback from that. I've had people who are self-employed use the funds in the business account all the time. So you should be fine. If you have funds, hey, Evan, thanks for joining. If you have funds that have been in your account for 3 or 4 months, those are your funds. If they came from, the cartel, or if they came from Grandma Betty, wherever the heck they came from, once they've been sitting in your account for 3 or 4 months, we wouldn't know, because we're just collecting April and May. And something that got deposited in February, unless you tell us like, hey, just want to let you know this got deposited 4 months ago, we're never going to know. So yeah, like you said, been seasoned 3 or 4 months means they've been sitting in there for 3 or 4 months. All good. All good. All right. This is a question that you guys ask the best questions, and I wouldn't even think of all these questions. So thank you guys for asking these questions. Like, I had a conversation about this, and it's where it's good to get the best information versus the first piece of information. Somebody called me on Friday, and they said that they talked to their current servicer, or maybe it was a different lender. I don't know who they talked to. We've got to be out of forbearance and make 3 payments. Some lenders were saying that a year ago. Some lenders I work with personally were doing that. And over the last 6 months, I feel like almost every lender has got on board with, once you're out of forbearance and officially, you're out, you've made an agreement. Yes, we're going to tack it on the end of the loan, or whatever agreement you come to once you're out. And yes, my first payment is now due on July 1st, then you're out, and we can do a cash out refinance. There's no waiting period. You just can't be actively in forbearance. So thanks for that question, Jonathan. I appreciate it. It's a common question because I got it. And I'm glad you asked it, because now I can share it with everybody. Once you're out of forbearance, most lenders are going to be able to finance you if you qualify. If there's a employment issue or other types of issues, then that's another story. But as far as being able to, most lenders can. This is one of 2. Okay. Oh, here's their lock and build option. 12-month lock for 3125, locked in for 360 days with a half point cost. That's pretty good. That's pretty good. Man, I like it. The scary part with the builder is like once you put a deposit, they're usually non-refundable. Wow, I'm liking this. Second option is 3.25 with 0.3 lender credit. Yeah, so you got a deposit fee that credits towards your closing, I'm sure. But yeah, either one of those is good. I mean, you're just locking in a low threes rate for a year. Sure, you can maybe get 2.9 if it was a 30-day lock, but this is a 360-day lock. Take it. Take it. Take it. Take it. And look at the 3.25 versus the 3.125 to see which one makes more sense to you, depending on how long you're going to live there, what the loan amount is, all that good stuff. Charles, thanks for joining. Self-employed borrowers. Basically, we want to see the last 2 years of your filed returns. So either you have 19 and 20 filed, and we take 2021 P&L, last 3 months of bank statements, and analyze that. Or if you haven't filed 20, a lot of people haven't. If they filed for an extension, so they're not going to have that stuff due till later in the year. Then we're going to look at 18 and 19 tax returns, 2020 P&L, 2021 year-to-date P&L, and the last 3 months of bank statements. And, the simple thing to think about is that if your bottom line, whether it's Schedule C, S Corp, whatever it is, if your bottom line, if enough reaches the bottom line where you've got a sizable tax bill, and you're paying taxes on 70, 80, 100 grand, then you're going to be in an okay position to qualify for something. If you make 300 top line and you have write-offs that meet that number and your bottom line is $1,700 for the year and that's all you're paying taxes on, you're going to have a hard time qualifying. And if you had great years in 18 and 19 and you haven't filed 20 and you filed an extension and your 2020 P&L shows a decline in income, like 2020 was a bad year. Some businesses did great, some not so much. Some were closed for half of the year. No fault of your own that you didn't have a good 2020, but lenders are going to not be so keen on that, as you would imagine. If you had $400,000 to lend and somebody said, great years 18 and 19, 20, my business almost went out of business. We didn't work half the year and it really suffered. But hoping to make a comeback here pretty soon, like you might be hesitant to lend money to that person, regardless of how, even if things have recovered in 2021 and whatnot. It's just it's more risk to the lender. You're gonna have a hard time qualifying there. Can we get a W-2 only loan? Oh, for sure, dude. And here's the thing, if you don't own multiple properties, so it's just your primary, because if you own multiple properties, underwriters are going to want to see the taxes for that reason. And your W-2, she's self-employed, you qualify with just your income. 1,000% of the time, we're going to advise do it with just your W-2 income. Like you said, it's just going to be a hassle to explaining the tax returns, her self-employed income, all that other stuff. So for sure, you can get a loan, just W-2s, no reason to supply taxes, and that's the way to go for sure. All right, Linda, great question. Do you have to show your lender all your bank accounts or only your accounts that have your down payment closing costs? B. Just the ones that have your down payment closing costs. And I'll tell you, sometimes maybe it's just people have worked hard. They're like, man, I want to show this guy all my bank accounts. I want to show him that I've worked hard to save all this money. Well, you're putting $42,000 down on this house and we don't need reserves. So just send me the bank account that's got $55,000 in it. The other 6 accounts we don't need. And really, most good lenders are going to advise you send us the least amount of things possible. The least amount of things for the underwriters to review, the better. So that one bank account, Linda, where your down payment closing costs are coming from are all I want to see. There's no reason for me to see the other accounts. You're not going to get a gold star or any bonus points or a reduced rate because you've got 100,000 in 6 other accounts. You qualify or you don't. And your rate and your terms are your credit score and your down payment, period. Having 900,000 in the bank or 62 when you only are required to have 45, 100 or 900 doesn't matter, right? So, yeah, great question. And just the accounts that we need for the transaction. Thank you, Aru. I do remember that. I do remember that math. And it was like the 3.125 was a 0.8 point difference. And we figured like 8-year break even or something, which doesn't make sense. And this is why people shouldn't be looking at just rate, because people will look and go, oh, 3.125, I want that. I don't want the 3.25. Well, if you're going to pay 8 years to see the savings of the 3.125, why would you not take the 3.25 knowing that there's a small likelihood you're going to be in that loan for 8 years? So cheers to you for the new build. Cheers to you to being able to lock in for a year. Cheers to you for listening to good advice. And thank you for the compliment. I appreciate it. Man, look at all these people buying new builds. This is like a new build. If you're buying new builds in California, especially Northern California, check out my buddy Mark McDonough. Mark McDonough Real Estate. He's got a YouTube channel. This guy talks about new builds all day, every day, knows all the sales agents at all the new build companies. And it sounds to me like everybody on this live tonight is checking out new builds, probably because you don't want to compete against 1,000 other people trying to put offers in on the resale stuff. All right, Daniel, here's your homework. Go to my channel. Let me see. I'm going to find it. I made a video on this, and I think I just named it Builder's Lender. Builders. I have to use the Builder's Lender. Man, that video is a year old, May 21st, 2020. And I'd like to think I gave good advice because, yes, you have to get pre-approved for them. No, you don't have to use them. You can use a local lender. You just have to weigh the builder's lender and the incentives they're going to give me to use that builder's lender is better for me or worse for me than what a local broker or a local lender that I want to use is. And your last question, does a lender usually match builder's incentives? No, the builder, because they want to keep everything in-house, says use our lender, $5,000 credit. Use Math and Mortgage Guy, donut. And so you won't get those incentives, but here's what happens. And I explained this in the video. Oh, mercy. It's the mic. Is that maybe my 3% interest rate has a $2,000 credit and they're going to offer you a 3.25 that has a $3,000 cost, but then they're trying to kind of sugarcoat their crappy rate and their crappy cost by saying a $5,000 credit. That is my Ethan. Dad's recording, bro. My 8-year-old's laughing at the door of my office, but it's locked. So you got to weigh it and just see, because sometimes I was better than the builder's lender and sometimes I was worse. And if you have somebody who you like and trust, who's going to give you honest information, they'll tell you. And that's what I've done. And I think in 2020, it was about 50-50. 50% of the time, it was like, stick with them. With that incentive, they're going to be better. 50% of the time was like, no, they're offering you $5,000 in incentives, but at that rate, their cost is $9,000 more. So it's still better to go with an outside person. So that's the best advice. Let me see if I can. Yeah, if you search builder's lender, you'll find it. I just put it in the comments, the link to that video. Thanks for the question. Teddy Love, are most cash buyers you're seeing because of homes they sold? I wanted this home so bad and somebody paid $750 cash. Geez. Sometimes that's a really good question too. And really, like when I look at the stats in my market, cash buyers there's not more of them. Like historically it's bounced between 10 and 15%. In 2011, when things were super cheap, it was probably 20 or 25% cash. And now it's 12 or 13%. And what I am seeing is that if somebody's in a position to buy cash and then refinance later and pull the cash out, it's like delayed financing is the name of it. And they do that because they have this competitive advantage. Like it's just the truth that if you are offering 760,000 and you're putting 10% down or even 20%, and somebody comes along and says, we're going to pay 750 cash, we can close in 14 days. That's an attractive offer. And you're going to have trouble competing against that. I don't think it's a lot of like sell your home, hold that cash, and then buy cash. I'm sure it's some of it, but I'm sure a lot of the cash buyers just are in a position, right, where them or grandma or mom and dad or somebody says, hey, listen, here's 600 grand, go buy cash. And what I'm seeing a lot of, maybe because I'm just in lending, is that they're doing that knowing that they're going to buy it for 600. They already have 150 in the bank, and they're going to pull 480 back out, and they're going to take the 480 and 120 of theirs and pay back mom and dad. Mom and dad did that because they knew it would help them get the offer accepted, and then they're going to pay back by pulling out 80% of the purchase in what's called like delayed financing. So it's a way to do it for people that got duffel bags of cash. Kia Lee. Current interest rate for primary single home and single family investment property. Roughly, you want some rough figures? Depends on down payment, depends on credit scores, depends on lots of stuff. But the rough guesstimate, primary, I like to do this way I'm not guessing. I'm gonna type in, I'm gonna do the investment first. I think you can get about 3.5 without points on an investment property if you put 25% down. If you're buying investment property, you want to put 25%. 25 versus 20 is a big enough spread where it's actually closer to 3,375. Investment property, 25% down, 3,375. That same 25% down on a primary, my guess before I price it, 2,875. Yeah, even lower, 2.85. So that's that. I know, that's what I was saying. Take that deal. That's a good deal. Who's this? Matt looking kind of saucy. Might be my wife. Might be my wife. This is More Life AOTY. That's how my wife talks to me. It better be my wife. Looking kind of saucy. All right. You're welcome, my man. You're welcome. How much are buyers stretching their loans once pre-approved since the market is higher? That's a good question. I think that most people that I work with, at least, are qualified for much more than they're trying to buy at, and then they inch their way closer to their max as they start to shop, as they realize it takes offering above the asking price, it takes a bunch of stuff, and so they're I know that they qualify for something that is 700,000, but they start at 500. And I show them 500, 525, and 550, and they're looking around like, holy moly, like stuff that's listed at 549 is selling for 585 or 590. Then they inch their way up to 600. So they're stretching, but not necessarily hitting that max they qualify for, if that makes sense, right? Because I'm never, ever hardly ever dealing with somebody where it's like, here's the max you qualify for. And then they're just making offers right at that max. Maybe it's great consulting up front where I'd advise against that. Or maybe it's just that, buyers today are super well qualified. And that's what people don't get. People are like, oh my gosh, if rates go up or prices continue to go up, nobody's going to qualify. Not the truth. I got people that are qualified for $1 million purchase and buy something for $475. And so, as much as it sucks for some people, what the pandemic has done is has had some people do amazingly well. Some people have, lost their jobs, got hours cut, have had a hard time, but they describe it as a K-shaped recovery where it's like some people up a lot, some people down a lot. And it's just the truth where those people that are on the top of that K are doing extremely well. Where if you gave them a 4% interest rate and told them prices were 15% more next year, they'd still qualify. They wouldn't not be qualified. So I keep going back to this one because my wife uses saucy in a different term. Maybe you're talking about saucy like Matt looking saucy like drunk. Clean and sober, so not saucy. If that's what that was. Kombucha is all I'm working with, and I've been living the clean life for years and years and years. So if that's what it is, then sorry, the answer is no. All right, what else we got? I think I'm going to go for another 15 minutes. Holiday special tonight. If anybody wants to jump on, I put this link up here at the very top of the comments. If somebody want to jump on, I think it's fun. I think it's fun when you watch a live and somebody jumps on there and they're asking questions live. If not, it's okay to be shy. But we got about 15 minutes. Jam out whatever questions you got. If you got an idea for a future video, I'd love to hear some feedback on that. I put notes in my phone, and during the week when I'm talking to people, I've got this video ideas notes section. What do I have in there right now? Videos. There was a B of A grant for like 17.5 thousand. I saw some people do videos on. Seemed like it was decent. I don't know. Anything with down payment assistance or grants, so hard to get off or accepted that it might be not worthwhile. Can you pay above the appraised value with an FHA loan? That was an idea that somebody had brought to me. So if that's of interest to anybody, let me know. Because for whatever reason, some people think that if you do FHA or you do VA, you do a government loan, you can't pay above the appraised value. And I'm here to tell you, you certainly can. And I've seen many offers that do just that. They offer to pay above the appraised value, and somebody's using an FHA or a VA loan. You can certainly do that. For whatever reason, the perception is, yeah, someone's putting 0% down with the VA loan or 3.5% down with the FHA loan. They don't have money to pay 10, 20, 30,000 above ask. It doesn't really have anything to do with it, especially in the case of the VA. In the case of the VA, they're using the 100% financing because they're eligible for it and they earned it. And let's talk about on Memorial Day, how much they deserve that VA loan. They deserve it, if anybody deserves it, veterans deserve it, right? And so I've worked with veterans that have 100,000 in the bank, but they're using 100% financing because they can, and it's zero mortgage insurance. It's a great rate. They've earned that great mortgage product and they're using it. So anyway, maybe I'll make that future video on how sure you can pay above appraised value on any loan type, really. Optic non-conventional loans. Sure. I mean, I'm a broker, so I've got access to tons of lenders with tons of different products. The truth of the matter is I'm a really firm believer in doing a few things really well versus doing a lot of things not so well. So I've got lenders that I send debt service coverage ratio loans to. I've got lenders that I send bank statements loans to. There's probably 30 or 40 other products that would be considered non-conventional. And if that's what you mean by non-conventional, I'm assuming that's what you mean versus like FHA, VA, USDA. Those aren't conventional. Those are still in that whole sphere of conforming loans, right? Versus non-QM type stuff that is different, like I talked about. So the answer is yes. The answer is yes, but there's the asterisk is it's limited because I don't want to be so wide in my net that I'm losing the opportunity to be really good at what we do. So me and my team are really good at the 1 to 4 unit primary or investment property, certain types of deals and certain types of programs, not all of them. If you're trying to do a construction loan, if you're trying to do a rehabilitation loan, some of that stuff, I'm just not the best bet. And I'll gladly refer you to somebody. My best piece of advice is going to be find somebody that does a lot of those. Don't find somebody who's like, yeah, I can do that. I gotcha. That's the first one they've ever done, or they've done 4 in the last decade, because those things are, just more complex. Yeah, hit me up. I made a video on non-QM. I think the title of it was bank statement loans, and the bank statement and the debt service coverage ratio. I send those to a couple different lenders that offer them, and they offer, those things have great terms. Shoot me an email, matt@mattthemortgageguy.com. And before I forget, if you're outside of California, you want a great broker who is going to help you out in whatever state you're in, greatmortgagebroker.com. You go there, it's really quick. It's 6 questions: name, email, phone number, what state are you in? Do you need a realtor referral? And I've gotten great feedback that the partners I have connected to that are responding very quickly. They're answering your questions very quickly. So greatmortgagebroker.com. You land there, you'll see a video of my smiling face. You'll be able to fill out that short little form and get connected to a broker in the state you're in. If it's not California, if it's California, matt@mattthemortgageguy.com. Hit me up there. Oh, this is a good question, Aru, on the new build. You'll pay for it now, which is fine. And what happens on new builds, even though it's a year out, maybe in a few months or 6 months, they've got the framing up and the appraiser comes out and does an appraisal and says it's worth 630 based on these finishes. And then before it's built, they come out and they go, yep, this happened, these finishes, and everything's done. And that way, the reinspection, 1004D is what it's called, happens. And so it's like a follow-up to the first appraisal, but they want to get it. I don't know why the heck you would have a loan in underwriting a year out, though. So much stuff could change. They're going to have all that stuff new again. Like, what's the point of underwriting a loan right now that's not closing for a year? Maybe they just want to know that you qualify, right? But that would be the pre-approval. But literally everything you submit today is going to have zero bearing on what they submit like next year. Interesting. All right, Amy. How much needed to buy land? This is a popular question recently. And before I answer it, I just want to tell people, as much as it sounds really cool to buy land and build, 1, it's hard. 2, it's expensive. And 3, it's expensive. The land is going to take 30 or 40% down because it's risky. A lender, you buy a piece of land, there's no income being generated by that. So it's basically a cash flow negative piece of dirt that they're lending money on for you to buy. So surprisingly enough, as much as I don't think banks do a very good job with mortgages, US Bank in California, and I don't know what other states they operate in, have been for years the best place to get a land loan. So if you're in a state where you have a US bank, Give them a try. I couldn't even tell you, um, if you don't have a U.S. bank, where I would go for a land loan, but you're gonna generally have to put at least 30 or 40% down on that land. Yes, Kia, definitely based on credit score. So the 285 and the 375, I think that I mentioned, for 25% down was like 760 and above. If you got a 660, it's going to be worse. If you got a 720, it's going to be somewhere in between. But down payment and credit score are the factors for interest rate. That's an interesting question. At the beginning of the pandemic, everyone's moving out of condos. Condos are crashing. People don't want to be in city centers. They're moving to the more rural areas. And I've seen rural areas just crush, right? People are like, forget the city, forget living in city center. I want to go out and have 2 acres. Those homes are selling like wildfire. No pun intended. They're in wildfire areas in California more often than not. Um, but the condos haven't seen as much of a hit as you would think. For me personally, I think that I'm dealing with people buying more condos than ever because they're being priced out of the single family market. And somebody who thought they were going to buy a 3-2 in the market they want to live in or the city they want to live in has said, you know what? The 3-2s are too expensive. I'm going to find a 2-2 condo and just be happy with that little condo. So yeah, I don't know what the numbers are though. I mean, I won't pretend to know and take a guess. I would think that they're doing all right. That's my guess. All right, Kayla. Hello. Thanks for joining. I see your question down here. Um, Interested in a refi, but have two lates due to the pandemic. Depending on now, here's where it's not black and white. It's not like no way you can do it. Yes, for sure you can do it. Other credit factors, other stuff being considered, the lender that you work with is going to take your full file, pull your credit, put it through the automated underwriting system. And I'm seeing a lot of lenders deal with 1 30-day late or 2 30-day lates in the last 12 months because of the pandemic. And because it's something that's happened. The thing that I don't want to rub dirt in the wound, but you should have taken forbearance if you were in a position where you couldn't make your mortgage payment. You would have avoided the lates, but here we are nonetheless. So get with a lender you like and trust, have them put together a file and run desktop underwriting to see if you qualify for a refinance. Hopefully those haven't crushed your credit, because then worse credit is going to be worse terms on the refinance. But I wish you the best of luck. If you're in California, give me a call. I'm happy to help. If you're outside of California, greatmortgagebroker.com. Fill out that quick questionnaire and get those questions answered there. So hopefully that was helpful, and best of luck to you. If the credit has really suffered and you're down to 660, my best advice is do all you can to get back on your feet, get those mortgage payments paid on time, and have a good 6 9 12 months record of no lates. Let the mortgage score pull back up to 700 720, and then refinance in the future. Rates shouldn't be going up too much in the near future. And today's rate, if you have a 660 versus the rate 6 months from now, if you have a 720, probably going to be better off with the higher credit score down the road. That's just my guess. Can I get a FHA, VA, or some other low percentage down payment loan to buy another house if it will become my primary residence? Sure, you could. And my assumption is that you already own a home, because you're saying buy another house. You could only buy FHA if your current loan's not FHA. If you have an FHA, to buy another home FHA, there would have to be an exemption. And I made a video that's a really popular one about exemptions FHA, or maybe it's like 2 FHA loans. I think I have somewhere on there. Can I have 2 FHA loans. What the heck is the name of the video? I made a video on this where there's like FHA. Can I get 2 FHA loans? That's the name of the video from 2019. And, if you're moving 100 miles away, if they've got 2 borrowers and one's staying and one's leaving, if your family is growing, there's different ways that you can get a second FHA loan. Sorry if that took so long. I'm tired. I've had too much sun today. Then you can get another one. Or if your current one's conventional, then you're all good. VA, it's a matter of your, what do they call it? Eligibility. And so people can get multiple VA loans if they have enough eligibility. You got to talk to a lender. You got to have them, run your VA eligibility to see what you can buy. Man, I'm fading quick. Let me jam through some questions. Best rates for HELOC. Call local small banks. Small banks is where I've always seen, like, small community banks. For me in California, like, small community banks will run these 1-year promotions whenever they're trying to get more home equity lines of credit. They'll offer really great terms. And for these small community banks, what I really think, Dan, is that they're trying to bring in more customers. And there's a lot of, like, loss leaders, right, where they're going to offer amazing terms like 1.99 for the first 12 months or 1.99 for this long. They're trying to get you in there. Maybe they're going to get you to open up a business account, open up a credit card, open up some other line of credit. And so small community banks, I think, is the best place for sure. All the mailers I'm getting are absolute crap when it comes to HELOCs. So throw those in the trash like I do. Yeah, I'm sure. I'm sure it's that. They just want to pre-approve you. What the bleep do sellers want? Trying to put 3 to 5% down and above appraisal. Nobody biting here in Massachusetts. Offer more, Barry. Sellers want more money. So 3 to 5% down shouldn't be a problem if you got a great realtor and a great lender who are saying, like, listen, this is Barry Smith. This guy was a great. Oh, that was Barry Sanders, huh? I thought you played for the Detroit Lions. That was Barry Sanders. Never mind. Barry Smith's a great guy. He's got W-2 income. He's got 800 credit score. He's putting 3 or 5% down, but this guy is a slam dunk. He's got another 40,000. He's willing to pay above the appraised value. Whatever they can do to help, sweet talk the list side. Let's hope you get some, like, more inventory should be coming. So maybe I think, you know what, Barry, I feel a June contract being accepted in your future. Circle back. Employment gap will be on the new job 6 months in July. Yeah, I think so. Here's the thing, Lanika, is they want a 2-year history, and people have gaps in employment for a number of things. And I've done loans where somebody had a 7-year gap where you were working, then you stopped working in 2014, you had twins, you were raising your twins, you had a grandmother who was sick and needed care, so you stayed home and cared with her. Now you're back, and you've been back for 6 months, and we're going to take the old job from 7 years ago and the 6 months, and that's your 2-year work history. The most important thing for your scenario is going to be what type of pay on this new job. If you're back for 6 months and you're working for the state, you're working for the county, you've got salary, and you're getting $4,200 a month every single month, 1,000% you're going to be fine. If you're back on a job that has any sort of variable pay, it's hourly, or you get some commission, you get some bonus, you get some this, that's when it's hard. Because then the lender's like, what do I think she's going to get paid in the future if I only have 6 months to go off of salary? Fuck, you're good to go all day. If the first lender tells you they can't do it, talk to another one. And my assumption is you have a 2-year history somewhere, even if you've got an employment gap. You're good. 6 months back on the job, salary, I like it all day. GreatMortgageBroker.com. If you're outside of California, if you're inside of California, give me a call. You're good. You're good. I like your chances a lot. And if somebody tells you no, then it would be for another reason, not the employment. Jimmy, I appreciate this more than anything. I've gone over my allotted time. My family's like, where is this dude? Locked in the office on Memorial Day. So I'm going to leave it on this one. I really appreciate these fine words. I appreciate that you subscribed. I'm going to jam. I'm going to get out of here. One more. Under construction for a new build, closing August 16th. I would look at the 60-day and the 90-day. Oh, wait. We're about 75 days out. Yeah. So the 90-day, you're inside of that. You can look at that and then look at the 60 and see how different the pricing is. 60 is going to be better. It always is. The shorter the lock, the better. And decide whether you want to let it ride for 2.5 more weeks until you can get 60 days out. So that's my best advice. Thank you, everybody who joined. I appreciate it. I'll mention it for the 1,000th time. And I'm sorry if I've been beating this one, but greatmortgagebroker.com. That's how you connect with the broker outside of California. If you're in California, shoot me an email, matt@mattthemortgageguy.com. If you wanted to shoot me an email and say, hey, Matt, I thought of this. I'd love for you to make a video and give me your opinion on this subject or that. All the feedback I get from everybody who watches, for everybody who is leaving comments on my videos, I appreciate the heck out of it. And then I use that to answer your questions, because your questions inevitably are questions that other people have. So thanks for watching. Hope you enjoyed it. I sure did. Have a great night. Bye-bye.